Hi, I'm Chris Farah, Farah Financial, and I'm also president of the Reading chapter of the Pennsylvania Institute of Certified Public Accountants. Under the Affordable Care Act, there's three main categories. One is employers with over 50 employees, employers from 2 to 50 employees, and then sole proprietors. Sole proprietors fall under the individual mandates, the other two would be under the employer mandates. As an employer with more than 50 employees, you have to abide by the guidelines for providing insurance, health insurance, beginning in 2015, January 1st, 2015. If you're from 2 employees to 50 employees, you're not currently required to provide any insurance. The definition of a full-time employee or a FTE, full-time equivalent, has changed. It's based on a 30-hour work week, and they take into consideration part-time employees and full-time employees. For the Affordable Care Act, you need to determine how many employees you have, both full-time and part-time, to determine how many FTEs you have. There are some exemptions under the healthcare mandate. Native American groups, incarcerated individuals, illegal aliens are just a couple of the examples. As with any insurance, business owners need to develop a cost-benefit ratio and determine which is best for the business. Under the Affordable Care Act, if you have more than 50 full-time employee equivalents, you have to provide insurance. But if you're in the group that's from 2 employees to 50 employees, you have an option to determine what is best for your company. One of the evaluations is the cost of the insurance versus having the employees take care of their insurance themselves and possibly being at risk for the penalties. All of that, including the cost of the insurance premiums to you as the employer who's offering the plan, have to be weighed carefully, because there are some tax credits that could be potentially out there if you fall into less than 25 FTEs and your employees are paid an average of less than $50,000 a year. And the other side of it is the penalties and the subsidies that the individuals may get on their own if you did not provide insurance. When a small business with less than 50 FTEs is determining what's the best option, they have to weigh the cost of the insurance less any deductions and credits that they may get for providing healthcare insurance versus what the potential is for the employees to be on their own providing their own insurance and some subsidies that they may be eligible to get. As an employer, you're not going to know all the pieces, but you can guesstimate what the individuals are making. Just at least to do the calculation. But that's a critical piece of determining what the best course of action is. Because on the one side, you're bearing the brunt of all the costs, the insurance costs and the credits. On the other side, you're forcing your employees to take that. So you have to weigh both options to see which is best for you. If you have less than 50 employees, you're not required to provide insurance to your employees. And the situation is not black and white. It's not all insurance, no insurance. As a small business employer, you have the ability to be a little creative in a way. You can do something in the middle where you provide insurance, however your employees may have to pay for part of it. You may also do some other options that are out there that your insurance broker can help you with like an HSA or a flexible spending account. All those things need to be considered, and the best course of action as a small business owner would be to gather as much information as possible before you make the decision. So it's not just a tax question, it's not just a health insurance issue, but you've got to work with the different disciplines to get the right answer. So as a small business owner, you're going to gather information about your employees, you gather information about insurance costs, and then you look at the tax credits and the tax repercussions and make your decision based on all of those answers. When evaluating the decision to provide insurance or not to provide insurance, the most difficult piece to evaluate is the individual subsidy. If the employer decides not to provide any health insurance, the individual may be eligible for a subsidy under the current guidelines, which is a floating or a sliding scale based on household income. That piece is going to be very difficult for a small business owner to calculate because they may only know their one employee's wages, and if the employee is married or have other income producing ventures, when the employer decides, well, they may be eligible for a subsidy, in fact, they probably aren't because of their pieces that this employer does not know. That is the most difficult portion to get, because everything else you can get. You can run through the calculations, you can get insurance costs, all of that is available. but that piece, without specific conversations and asking personal questions, small business employers will not be able to obtain. Beginning January 1st, 2014, small business owners would be available to purchase health insurance through SHOP, the federal exchange. One of the benefits of going through SHOP is that you would be eligible for some potential tax credits if you have 25 or fewer FTEs. Those credits could be as high as 50% of your healthcare costs. However, practically speaking, they're not. They could be very small. There are conditions in order to do the calculation on Form 8941 is the calculation for the credit for small employer health insurance. The conditions are that you have to have less than 25 full-time employee equivalents. You have to have an average payroll of $50,000 or less, and that you have to provide or pay for 50% of the single individual employee's healthcare insurance. And again, it has to be purchased through SHOP. Under the Affordable Care Act, all employers need to give notice to all of their employees by October 1st of 2013 of whether or not they are providing insurance. There are actual forms that have to be given to all full-time and part-time employees to notify them so that they have ample time to get their situation in place. So if an employer is not providing insurance, individual employees may go out and get insurance on the open market or deal with the penalties of the mandate. So there's practical things that you need to do, and now's the time to do them. Don't wait. Get out, have the conversations with your insurance broker, with your accountant, and work on getting that information together so that you can be proactive and meet the deadlines that are coming up. They keep changing, so be aware that these changes could happen as early as September 1st or as late as September 30th, as we've seen before. The first deadline is October 1st, and that's the one that we have to start planning for based on today's information.